So I think that, multi-baggers can come in number of shapes and sizes. The most obvious ones can be technology business, right? So now the issue with technology businesses is that, like Buffett says, industries with rapid change are the enemy of the investor. So we would need to find tech businesses which have kind of got attributes like, for example, a Microsoft, which has a very strong install base of cloud-based applications and such and software, which people cannot do without and people cannot change easily and such. And we would need to find those businesses at reasonable valuation. So usually the problem we get into with these great software companies is everyone knows they're great and the prices reflect the greatness. But sometimes you can get aberrations. You can get, like, one of the things that happens is that when a packaged software company is switching to the cloud, so the revenue is going from licenses being sold to a recurring subscription-based model, the revenue will take a dip initially because as they're transitioning, if Microsoft sold Microsoft Office as a package, they would collect like $500 or $400 one shot for one user. When they do it through a cloud-based offering, they get like, $8 or $10 a month. And so near term, your revenue will drop. But long term, you do a lot better because people may not, after 4 years, buy another package for you. They may run the same Word software for 10 years without upgrade, for example. So sometimes you can get a mispricing because the market doesn't appreciate this particular nuance of, the earnings taking a dip temporarily and such, and it's not being normalized earnings and so on. So you can get great compounders from the classic, very stable recurring revenue software businesses or cloud-based businesses and so on. That can be a valid way to go. You can also get it from companies that are really, really good at what they do. Like Costco in the United States would be an example. Walmart might be an example. So these are companies in really difficult spaces. Retail is a really, really difficult space to be in. But sometimes you get some businesses that are really great at it, and they've proven they can endure for a long time. Then it can work out very well. One other thing about these multi-bagger compounders, if we go back to the example of Rakesh Jhunjhunwala, is, like I said, he put 4% of his portfolio, which later became 50%. I think Titan compounded at more than 30% a year for a long time. And it has a great model. It'll keep going. I mean, I think that runway is really long. It tolerates a very high error rate because let's take an example that the other 96% of Rakesh's portfolio went to zero. If that had happened, he would still have a major home run. So if we make these compounder bets, and let's say we put 10% of portfolio into each bet, and we study these businesses carefully, and we make 10 of these bets like NVR, AutoZone, and whatever. The most important thing, which is the most difficult for investors, is after that, you need to go to sleep. So after making the bet, because nothing will go in a straight line, there will be news coming out all the time. There's invasions into Ukraine, and there's the inflation in the US, and the Fed is raising rates, and the business might take a hiccup here and there or whatever else. So there's 100 different reasons for which one might be tempted to take action. And to Rakesh's credit, considering that he had like 4 screens in front of him all day long, he never touched the Titan position for several decades, died with it. So the important thing in investing is not how smart you are. This is not a game of like the highest IQ person wins, because it's not that difficult to figure out if you gave me, or if I gave you a list of 100, the top 100 market cap companies in Thailand, and I just ask you to rank them in terms of quality of business, forget the valuation, forget everything, just quality of business. And I asked, 50 students to do that. Their list wouldn't be that different. What companies show up in the top 10 might be very similar, top 20 might be very similar, bottom 20% might be very similar, and so on. So the identification of a great business is not that difficult. What is the most difficult is not doing anything after you find yourself in the fortunate position of ownership of these businesses. So taking Rakesh's example, if you made 10 bets and you just said, okay, no matter what the news is, I'm just going to ignore everything. And in some cases, the news dictates that you should actually sell. The business has gone into secular decline, for example, and you can tell it's going. But let's say you take no action. You live with the secular declines, see some of them go to zero, all of that. It would still be an exceptional run at the end of 20 or 30 years. And the reason why most investors don't enjoy those great returns is because they get in their own way. They are not content with watching paint dry. If you are the kind of person where, some painter has painted some wall white color, and you can just sit there for 8 or 10 hours and watch it dry and be really happy, then this is the business for you. French mathematician Pascal, so one of his famous quotes is that all man's miseries stem from his inability to sit quietly in a room and do nothing. I would just paraphrase Pascal to say all investment manager miseries stem from their inability to sit quietly in a room and do nothing. And so one of the things I try to do is I try to do a lot of sessions with students like you because it absorbs the time. If I have too much time to, worry about the portfolio or think about things, it might cause action. Buffett plays about 10 or 15 hours a week of bridge. And I play about 10 or 15 hours a week of bridge. Bridge is almost as good an activity for me as investing. I think investing still gets a little bit of an edge for me, but bridge is a tremendous activity for me. I enjoy it a lot. If you put me in a prison cell for the rest of my life with 3 other bridge players and, the same food being served for every meal, I would be extremely happy for the rest of my life. That would be a very blissful existence. Bridge is a very healthy pursuit for investors. And so I think that investing is a great activity for gentlemen or ladies of leisure, gentlemen of leisure or ladies of leisure, where basically, if you can be really content to not take any actions on your portfolio, you will do really well. And one of the reasons the index is so hard to beat is the index is too dumb to know that it owns Microsoft. And it's too dumb to know that it owns Alphabet. And it's too dumb to know that it owns AutoZone. And it's too dumb to sell any of them. And so what happens with the index is that every once in a while, the people who run these indices make some change, right? Like they'll take GE out of the Dow Jones, take IBM out of the Dow Jones. Usually the changes they're making are made such a long time after these absolute loser companies have proven that they're losers. But they'll never take a Tesla or a Microsoft or an Alphabet, which is cranking and climbing out of the index. That will not happen, right? So they usually take out the companies where they see a decline in sales, losses for many years, the business has lost its way, and so on. And so that's the reason why the index is so hard to beat, because the index is really good at watching paint dry. It just cranks with doing nothing. And that's really what you want. And the only way to get better than the index, because the index also owns a lot of losers. But like we saw with the Rakesh Jhunjhunwala example, a 4% position becomes 50% because he just doesn't touch it. And so what ends up happening with the index is Apple starts off being really small and Apple becomes a really large position. And Microsoft starts off really small and it becomes a large position. And so when you look at the index after 20 or 30 years, you find like 7 or 8 companies that are like make up 30-40% of the index and such. So that's why indexing is really good for almost all market participants. Most market participants will do better by focusing on the index.